Sndl Stock Predictions, July 17. In today's Sndl Stock Predictions. Sndl better growth stock than AMC. Alright, let's get started. While Sundial's quarterly revenue shrank by 29.4% year-over-year in Q1, its fortunes may be turning. The company's gross cannabis sales are down by 30%, but its income from investments like loans is rising dramatically, yielding $15.7 million Canadian dollars in the first quarter. In the fourth quarter of 2020, it only made CAD $9.3 million. That rapidly growing investment income was made possible by, you guessed it, CAD $1.08 billion in cash, generated by issuing new stock in the wake of its popularity on Reddit. The biggest benefit of issuing loans to other cannabis companies is that Sundial doesn't need to take on pesky overhead costs to turn a profit anymore. So, in the most recent quarter, it was able to report CAD $1.7 million in earnings from operations for the first time. In the meantime, management has promised to only pursue growing its cannabis revenue if it is profitable to do so. And, as a result of cost-cutting initiatives, it managed to massively reduce its cultivation expenses, from CAD $10 million per month in early 2020 to CAD $4 million per month in the first quarter of this year. Sundial's costs are falling while the largest segment of its revenue, investments, is rising. Though it's difficult to imagine a rapidly growing Sundial given that its cannabis sales are so weak, the company is trying to make the best of the resources it has, and the plan appears to be working. Sundial is by far a better growth stock than AMC. Aside from lacking a clear strategy for returning to steady growth, AMC's significant financial and business challenges are dramatically curtailing management's room to maneuver. It may be the case that AMC will slowly return to its pre-pandemic performance, but it's important to remember that COVID-19 is not a thing of the past in much of the world. And the company has $11.05 billion in debt that will need servicing. Over the last 12 months, it reported paying $477.2 million in net interest expenses, and that value may soon rise even further. In contrast, Sundial could soon be firing on all cylinders, and it won't rely on the slow and unpredictable pandemic reopening process to do so. While it's still a very risky stock, it has the advantage of being in more than one line of business. Even if its marijuana sales don't drive earnings, its investment income might be able to carry the company, especially because it won't be burdened by paying off its minimal $1.34 million in debt. That's what's been happening this week in the world of Sndl stock predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to all investments right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of Sndl stock predictions. If you enjoyed this edition of Sndl stock predictions, leave a comment and please hit the like or share button, we'd really appreciate it. Are you still watching and want more? Check out last week's Sndl stock predictions by checking out our Sndl stock news playlist.